Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, energy is really setting up for a big move. We're going to tell you all about it and where you can get invested. Let's dive in.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes. And if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. Hey, Bob. Well, it seems like it's hurricane season on both coasts.
Yeah, believe it or not, Phil, the storm track as of 3 hours ago was like going probably 1 mile from my house in Southern California. So it'd be pretty interesting to see. But believe it or not, I don't want to talk about that storm. I want to talk about what's potentially setting up in the Gulf of Mexico and in the Caribbean that can affect energy prices. And the reason why it's important this year is that they drained out the SPR. So our reserves are really low. And also they've been drawing heavily out of the storage tanks in Oklahoma. And so there's very little inventory, if you will. There's a lot of reasons for that, economic reasons, because of the high interest costs right now is that nobody wants to hold inventory, okay? They want to just get the energy when they need it so they don't have to pay basically carrying costs. But if you look at that big black circle or oval in the Gulf, if that materializes over the next 2 weeks or something moves in from the Caribbean, they have to shut the wells down in the Gulf. And that usually spikes oil and natural gas, Phil.
Yeah, looks like they're going to get big spikes. that's a really busy hurricane map.
Yeah, even if storms don't really produce anything, the fact that they threaten those platforms, they shut them down. And I just wanted to maybe show you here because crude oil has been, this market's been pretty insane this week. And crude oil, it doesn't care, Phil. So that's telling me it looks like there's a rotation coming out of what they call the high beta stocks and then going into, looks like it's rolling into energy, which makes sense with the way the yield curve is setting up. And I just want to show you, this is a crude oil contract. This is daily. And we're forming believe it or not, that is actually an inverted head shoulder pattern, even if it's on an angle.
Yep.
And so it broke out today. And so the measured move on that, this is an hourly chart. Measured move is about 83 to 84 bucks. And then I think we're going to run to the August highs at $84.50 to $85 area. I'm still in the camp that we'll be over 90s before this is said and done this year. So this can get much higher. And this is not even considering potential disruptions in the Gulf. This is money rotating desperately out of tech and into somewhere that has a yield. And so this is a crude futures contract. Most people can't trade this, so you can put up USO if you want. And this is one I trade. I have shares in USO, options in USO. And so I'm looking for my moves here to take this up to $74 to $76 here. And this is over the next maybe week to 10 days. So it's not a long-term trade. And the only thing you got to watch out for, if they stall this thing, Phil, around $74 and roll it over, then we know oil's over because then it'll form a head and shoulder pattern. But right now, all signs point to a push much higher.
Yeah, and I like the fact, too, that crude oil the volatility had compressed, right, and then expanded. And that's one thing with crude oil you'll find a lot is that it'll compress and then it'll expand on those volatility bands. I'm going to throw that crude oil up chart again. But it does that a lot. It compresses and then it expands, compresses and expands. So now that with this expansion on the top side, I agree with you on the target. I think that's your measured move, and probably exceeds that given the setup here. So pretty good
perfect.
play.
And we our family owns a lot of ExxonMobil. I actually even added more ExxonMobil down at 102. And Wednesday and Friday this week, we've had like major squeezes in it, and it's broken the range. It was in this $100 to $110 range, and now it's breaking out of it here numerous times. So I think it's gonna have a 10% move up higher. ExxonMobil. People interested: Exxon, Oxy, Pioneer Drilling, all the natural gas drillers were up today. So I think energy is going to be a recipient here. We're not getting our big sell-off yet, Phil, in the markets. This is like appetizer,
Yeah.
so you'll know it's bad when I'm sitting here complaining to you why my energy stocks are going down with the market. Okay.
Yep.
That's a liquidation, but I'll be out by then. I'll be in bonds. So, and speaking of bonds, can we throw this next chart up? There's a bit of an aside, but I think it also tells a story here. I think what they're trying to do. So Phil has been talking to you guys ad nauseum about this stealth QE they did all summer long. And reason why we started selling off in August is because Janet Yellen stopped issuing T-bills and started issuing T-bonds. And why that's important, T-bills are able to collateralize and then use that money to invest in the markets. T-bonds actually take liquidity out of the markets. Lo and behold, the Treasury is going to increase the amount of T-bills that they're allowed to issue. They gave themselves like a hard cap, Phil.
Yep.
And they're blowing through this. So it looks like that's why you want to pull your hair out every time they say they're going to try to get things back to normal. Simply impossible.
Nope. Like the market, if the market isn't being spoon fed and the training wheels on it and some kind of assistance from government, it just spins out. It just volatile. That's the problem, and why when you have so much leverage as we do in the system, this is the problem. Is now it requires more and more support, more and more liquidity, which tells you that in reality we're overvalued, because obviously if it forces everyone to throw liquidity into the system, this is about as stealthy and indirect as you get, is issuing T-bills, right? And that it's the only way to keep things from just rolling off, instead of just okay, let's let the market find its footing. But I think the problem with that is they've got it so levered up and so just drugged out on free capital that it can't, if it tries to have some organic searching for price, a fair value in price, it gets out of hand to the downside and things start to cascade lower. And that's been a problem in this market for a long time. And do we ever get away from it? And that's the big question, right? Do we ever just get away from it? Do they let the market naturally and organically trade? And my take is they can't, they won't. We've gone past the point where that happens. If they did, everything would crash because of all the leverage. And so therefore, it's going to be inflationary. And that's why we like things like Bitcoin and gold and, other hard assets that will appreciate, because I just think it's inescapable at this point. So, do you see I think if you do get a recession, I think the market does go down, but you're always going to have these instances where I think they're going to come in and do some sort of interjection just to stem the tide from really going out, because as you guys can see how quickly we rolled over. Real fast, over 200 points, over 5, almost 6% down. These are very steep, sharp turns in the market that in the past usually don't happen this way, but now we're like in the land of Eiffel Towers. Very volatile environment, and it's all because of the way they mismanaged the capital flows into these markets now. And now it's like dealing with a crack addict with a major withdrawal problem.
Yeah, I think you made a great point, Phil. This market is binary. It's probably the only thing binary that the government likes, right? So it's so you have it's either risk on or risk off. Yesterday you couldn't see a bid, and other days you can't see an offer. It's just
right.
it's like amazing. It's just it's like either the light switch is on or the light switch is off. But it's kind of scary. The thing is, when Phil says the market, remember, the market could squirt into different things. You could see the S&P 500 crashing, but the market is being liquefied because it's moving into gold and silver and Bitcoin and energy. So, you just have to bear in mind here, when we say the market, we're not just talking about the index. We're talking about they know that if they completely withdraw this market, we're down 80%. We're in Great Depression area. Okay, so we know they can't do it, but it just pisses you off that they're so sneaky about it, and they're pompous and pontificate to you while they raise your cost of living.
Yep.
At the same time, they act like they're pious and doing the right thing,
right,
when they're really just stealing from you. And that's the sad thing about it.
It is sad, and everybody's a lot of people in the working class are complaining. They're just like, it's hard to get ahead. You can't get ahead. The cost of living is too high. And then they come over here and they have press conferences of how they're reining in inflation, the rate of inflation. Well, that's great, but
everyone's stuck with massive inflation that's built up over the last 2 years because they flooded the market with money. So now there's too much money. Everything's gone up. All the valuations have gone up. People are willing to buy high and buy higher because they had this welfare money essentially in the system. So it's very frustrating. It's going to be very frustrating for people, especially when they say they've conquered inflation, but in reality what it is they've stopped the rate of growth in inflation, and you're stuck with a lot of inflation. They don't ever word it that way, but that's really the reality. And to be honest with you guys, we should, in all fairness, have deflationary cycle come in to kind of really pull some of the asset values down so that the cost of living does come down. And I think that's the bigger problem going forward. How they're going to address it, because it's going to be a big political issue going forward. You know what they're going to do. They've already done it. They're just going to, it's that going back to the well of free money, right? That's the problem when you give out money. I can understand there's times and places to do it in emergencies, but when you've done that in the past, the public that is going to start relying on that is going to be looking at these guys, at these lawmakers, and you're like, what have you done for me lately? And so now you're looking at buying votes with that stuff. And I just think it's really, really bad. And I think that ultimately we're going to get into a spot of really bad inflation. And that's why my thing is like, you have to hedge against inflation, because I think the genie's out of the bottle, Bob. And I think that it's just going to be an unstoppable thing. And it's going to be sad because, our kids, grandkids, it's going to be tough. I think they're screwing it up for them.
Yeah, I definitely do. Well, on that wonderful positive note, guys, we're going to let you go. And then tomorrow we're going to talk about, how to live in a cave with rags. And but anyway, hey guys, hit like, hit subscribe, notificate. Look, Phil and I are bullish because we feel pretty confident we can outrun what's coming, unless it's a God event. Okay, so so these are the areas you got to think about. They're rotating this market; they're not crashing it. So just stay with us, check us out. If you want to trade with us, go to tradelikeagenius.com, tradegenius.co. We'll put you in some of these right trades. We're still expecting a pump here, and before we get, I think, a September swoon. So there's some opportunities to make some quick dough on the long side before they rotate this thing down again for, I think, the low of 2023. So anyway, Phil, thank you, and we'll see you guys tomorrow.
See you guys.
Trade Genius.